I'm Josh from InvestorSalad.com. We are here to make investing more accessible to everybody. We think everyone should be investing their money instead of just saving it in a shoebox because it can turn into more money and compounding interest and all that. I want to talk about meta platforms, Facebook. They've taken a pretty serious beating. Mark Zuckerberg dropped off the top 10 most rich people on planet Earth and all of that. And I kind of want to get into why maybe things are happening aside from the fact that investors are freaking because of news headlines. You shouldn't really freak out about news headlines unless there's something else going on, and we're going to get into that. As you can see today, even into aftermarket trading, down 5%, and that's kind of horrible because that puts us down at 34% over the past month, 37% over the last 6 months, and I mean that's pretty significant. You know, generally the majority of this loss is from this past week, and I'm a little late getting to this video, but it's just because I was working on the website, and the website took me a little longer because I wanted to implement a little more complexity. That way it could give you guys as readers and, you know, the patrons a little more data and a little more information that you guys can go off of when y'all are making investment decisions. Let's get into some of the news headlines that are responsible for the falling stock price. 10 hours ago, Europe says they may shut down Facebook and Instagram. It seems like the reason why Facebook may go down and Instagram may go down in Europe is because Meta, with the ball in their court, is saying that they may pull Facebook and Instagram from availability over there because they are not going to have the ability to transfer user data to the US. And where their servers are primarily located in the US, then it makes it hard for them to use that data for marketing purposes for people using Facebook ads, Instagram ads, you know, pixel information, people that have embedded the Facebook pixel into their website. So that would be, you know, hard to mitigate, but all they would have to do to mitigate that problem would be to build servers overseas in Europe. And that's a way to get around that. And I foresee that's going to be the situation because I don't think Mark Zuckerberg's going to get rid of a whole country, especially Europe, their top tier country for advertising. I think he's going to wind up building a server over there. But of course, that's speculation. And of course, all of this is speculation anyway. The more significant valuation drop happened as a result of Facebook losing daily users on their platform. And that's kind of crazy because you think a website that gets all of their money, all of their income from users that stay on their platform every single day, it's a pretty bad sign when one day or for a quarter, some of those users stop using that platform. But the issue isn't like 25% of users around the world had dropped from the Facebook platform. It was the fact that before last quarter, there was 1.99 billion users every single day logging on to Facebook, which is like a quarter of the world's population anyway. So it's like humongous. And it dropped down to 1.98, which when you think about that, isn't that significant? It would be significant if it was 1.98 of the whole world that jumps on Facebook that no longer got on Facebook, that 0.01 billion of that many people around the world. But what had happened was it was geo-targeted to a place in South Africa that quit using Facebook. And I'm not so sure that that place in South Africa is a top tier nation when it comes to what advertisers pay to show their ads in that country, which advertisement money is how Facebook thrives and Instagram thrives. So that's how Meta gets a lot of their revenue anyway. So I'm not even concerned about those headlines. And that headline alone is what caused Facebook to plummet earlier last week. So with that being said, I wanted to double check some things with Facebook just because I wanted to make sure that if I was going to invest into Facebook, I knew that my money would be okay depending on the debt to equity ratio, depending on their earnings, depending on how Meta is growing as a company financially, not just off of speculation, because speculation can drive up prices of cryptocurrency astronomically, but speculation doesn't really historically have a place for long-term investors because, yeah, there'll be a short jump or a short plummet in a company's valuation and the price that they trade at, but ultimately it does not hold long-term. So right now, the current price is trading at $224.91. The fair market value based on financial evaluation is estimated to be right around $421.12. So we're trading at like 45% undervalued as opposed to what the fair market value of Facebook really is right now. Earnings and revenue for Facebook have accelerated over the last 2 years. And I and everyone else in the world know that COVID is definitely a driving factor for that. And that's another thing that we have to account for when it comes to the fact that some of the daily users have dropped off of Facebook last week. A lot of people around the world are going back to their daily lives. They're going back to work. You know, they're becoming desensitized to COVID. COVID is a real threat and it's killing a lot of people and it's killed a lot of people, and that's very scary. I'm not taken away from that magnitude. We are all going back to some form of normal daily life because we have to. And that's something that we're going to see moving forward with Meta is we're going to lose some of their yearly revenue, some of their quarterly revenue, some of their quarterly earnings because less people are going to be engaging on social media. But we're also, I think, going to see that on Twitter, TikTok. Well, not so much TikTok because it's more of a younger demographic that uses it. We're accelerating up until right now. I feel like a good explanation for why earnings are leveling off for Meta is because they're engaging in an expansion in VR. They're heavily investing in VR, which is kind of a cool thing because I think that might be the next internet. It might be the next whatever we do. You know, it's hard to explain what the next thing is, but I think that could be a possible thing. Even with all of these things considered, past earnings growth analysis, the past 5 years, Meta has grown 23.7% annually versus the industry that they are in, which has only grown 20.7% annually. And the market in its entirety has grown 13.7%. So Meta's killing it right now. Over the last 5 years, Meta's all right with growing. In the last 1 year, of course, due to the pandemic, I would assume, you know, they've done 35.1% earnings growth versus their industry, which actually did negative 8.9. So when a company's last year's earnings has exceeded its 5-year rolling average, that's definitely a good, strong indication of this last year that company has grown exponentially because in the last year alone, it's exceeded the amount of growth that it has accomplished over the last 5 years. I guess that's kind of self-explanatory. Meta looks solid. Short-term assets, it's got $66.67 billion. Short-term liabilities is $21.14 billion. Long-term assets, $99.32 billion with $19.97 billion in liabilities. A good way to explain assets versus liabilities, in my terms, assets is equity that is valuable, that makes a return. So gold, it's an asset. It can appreciate over time. Stocks, bonds, ETFs, those are assets. They can appreciate over time. A cell phone, it's like a liability. You have to pay a monthly bill in order to use that phone. A car, it's a liability. You got to fill it up with gas. You have to, you know, change the oil unless you have a Tesla. Some people argue that cars are investments, and cars can be investments if they're not driven and if they're a certain model and all of that. But generally, across the board, cars are a liability. So you get the difference between assets and liabilities. The cool thing about Meta is the debt to equity history. Meta has no debt. Yes, their equity has declined a little bit in the last quarter, But the fact of the matter is, Meta is debt free. Facebook is debt free. Instagram is debt free. And that's fantastic because they have leverage to where they can use some of this equity to expand. And I think that is primarily what's happening. And as a result, they've maybe taken some focus off of just Facebook or off of just Instagram, and the news in the media is going crazy about, oh my God, the world is ending for Meta. And I think in reality, it's a calculated situation. You got to understand this company is psychologically prepared mentally to go through some things. I think they are among the biggest intellectuals of our time for, a digital company. I feel solid about that. And I feel really great seeing this, being that they have zero debt. I wish I had no debt. So I would start to get worried. This would be a whole different video if, right around 2021, you got a red line of debt slowly climbing up there while this equity is shooting down. That's when I would get concerned, and I'd be like, I don't know, I'd set a stop loss or something. I'm set a stop loss for me. I'm a little concerned. Some people right now, they're holding Shiba Inu like it's the next big gold rush, and it might be, I don't know. And they're like, oh, there's nothing to be worried about. But man, Facebook's crashing and Meta's crashing. And I'm just like, okay, so you guys are following speculation. I'm not throwing shade, but just like people that are investing and they're worried about Meta, they're worried off of speculation. Another metric I like to look at is the number of employees year over year. And the reason I like to look at that is if a company is growing, they're going to hire more employees year after year. You want more employees this year than you had last year. You want more next year than this year because of the fact your company is growing. And that's what's happening right here. They're hiring employees at an accelerated rate. They're hiring more employees than they hired last year in the year previous. And that's what's happening here. Once again, if I saw right here that they stopped hiring people, if they stopped hiring people and were flat, or if they got rid of people, then I'd be concerned. I'd be like, oh God, Meta's going down, the world's ending, all that, blah, blah, blah. But I feel solid. I feel like long-term Meta is all right. I feel like we might have a bumpy road this year. Obviously, we're going to have a bumpy road this month and next month. Do I think we're going to have a bumpy forever? No, I don't think we're going to have a bumpy forever because Meta is in a position right now to where if some other competitor starts doing better than them, I bet they will buy them. And of course, the government's going to try to break the regulation stick across their back and be like, you can't do that. And they're going to be like, well, we'll buy you too. I'm just joking, but they probably would. Final verdict is I feel good about them. I feel cautiously optimistic, provided if debt to equity ratio changes, provided if they stop hiring people and start getting rid of people. But I feel great.